Hello there, this is James and you are watching tixeeLive. Today's little video, this is a watch-along of the US GDP, gross domestic product, and US initial claims, because both have the potential to have an impact on the market. Before we get into that, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your diligence. There you go, diligence. And of course, know the risks at hand before entering any trade. Right, with that out of the way, let's get cracking. Now, in about just under 9 minutes, we are going to have the US GDP, gross domestic product announcement. Okay. Now, the expectation of this is minus 1.3%. Now, to those of you who are new to trading, you might ask, what is the GDP and why potentially could it be so important? Well, in technical terms, okay, the gross domestic product annualized released by the US Bureau of Economic Analysis shows the monetary value of all the goods, services, and structures produced within the US in a given period of time. The one coming out is for Q1, okay? Now, GDP analyzed is a gross measure of market activity because it indicates the pace at which a country's economy is growing or decreasing. Okay, let me break this down a little bit more simple. Basically, the GDP shows how healthy a country's economy is. It's basically a health check. It shows how healthy that country's economy is. Now, the theory goes, of course, if you've got a healthy economy or growing economy, then that should be good for that country's currency, isn't it? Because at the end of the day, the currencies basically use the same paper. They're not made out of different materials to make them more valuable against each other. No, usually the strength of a currency is based upon the strength of that country's economy. Now, with the GDP, okay, if you get a strong reading, technically it should indicate potentially that the dollar should get stronger. Okay, if you get a weak GDP, then potentially that could indicate that the US dollar to get weaker. However, it doesn't work like that, okay? Because the market could look at it differently. The market can look at it pretty differently and go, no, actually, that's a bad sign. So we're going to rush into dollar as a safe haven. So there is that as well. Even if it's negative. Now, they are expecting a negative number, like I say, minus 1.3%. But here's the thing. I mean, last month in April, GDP came out as negative minus 1.4. Okay, so a negative 1.3 is pretty good, right? It's better, isn't it, if it comes out like that? Well, no, not really. Because March, the GDP was 6.9%. Okay, 6.9%. The month previously, February, 7%. In January, 6.9%. So really, we're seeing the impact, don't forget, the impact of the China lockdown, okay, and obviously the Ukrainian war take impact. Because this is why GDP was negative last month, and they're expecting a negative GDP again this month. So that's what the market is worrying about, okay? They're very worried about that. So like I say, this potentially could have a massive impact on the market. If it's better than expected, it could relate to the dollar being stronger. But in other words, the market could also look at it and say, no, if it's better than expected, risk appetite back in the market. So they're going to riskier assets other than the dollar. If it's worse than expected, we could see potentially a weaker dollar. Okay. Or we could see the dollar gain strength as the market goes risk off and go into safe havens. So this is where it could be extremely exciting. The other thing, which is coming out at the same time, which we'll also cover, okay, is the US initial jobless claims, okay? Now, the expectation for this is 215,000. What is US initial jobless claims? Well, the US initial jobless claims is the number of people that week who has for the first time signed on for unemployment benefit. Now, I have a feeling this might overshadow slightly the gross domestic product. And I tell you why. Because as you know, we are facing economic slowdown because of supply issues, inflation, and things of this nature. Okay, but as I said in my my session this morning, in the minutes, the FOMC did say we do have quite a stable job market. But a stable job market. But if we start to see a decline in that job market, then yes, this could really start putting pressure on the US. Now, just going through some figures. May, it comes out weekly, this report. Last week, it came out at 218,000. So that's 218,000 new people signing on for unemployment benefit for the first time. Okay. But the week before, it was 203. The week before that, 180,000. Then the week before that, 184,000. The week before that, 166,000. So we are slowly seeing an increase in jobless claims. So that is worrying. So whatever this number could be, if it's a lot higher than expected, the expectation is 215,000. If it's higher than that, then that could really send shockwaves through the market. Because I say the US has got pretty good unemployment. Their NFP was reasonable this month. Obviously, NFP is happening next week for the new month. And like I say, we do, and the Fed is saying we do have a very stable job market. If we see signs now that job market is beginning to wane, then we could see some real concerns in the market. So that, I have a feeling, I know I didn't talk about it this morning so much. I was too busy with the GDP, but I think this could overshadow. I think there's big concerns about the labor market in the US. Definitely. Anyway, we've got 2 minutes to go. I'll bring up the assets I'm going to be watching. Okay, I'm going to be watching the cable, because I've been talking about the cable quite a bit over the last couple of sessions, and there's some interesting movement in the cable so far in the European session. The dollar Japanese yen. Okay, the gold, as people know, I'm a bit of a gold bug, so I will be looking at gold. We'll look at the euro dollar as well, because that's been interesting so far today in the European session as well. And we'll also look at some of the other assets and see what the impact is. Now, we've got 1 minute to go, so I need to get my trusty phone ready, because this is where I'm going to get the data from when the announcement comes out, which would be should be within the next minute or so. So let's have a look. So like I say, yeah, jobless claims, I just feel that that's going to take center stage. I do. I think I really do. I think there is, because the job market has been the one sort of shining light at the moment for the US economy. It's the one thing they've been, using as a support, so to speak. So I'd be interested to see that. And it'd be, like I say, GDP is still a big thing as well. Don't forget, obviously, it's the health of the country. Let's see if it comes out negative 1.3 as expected, or if it's even worse. So yeah, any minute now should be coming out, and we should see the impact. Hopefully, see the impact on the markets here. Okay, it's interesting. Dollar yen are beginning to move. Okay, so any minute. Let's have a look. See, mobile phones are great, aren't they, for information? Keep you on there. Here we go. Okay, let's have a look. Any minute. Coming through any minute now. Let's have a look. Okay. Right, here we go. Right, gross domestic product, negative 1.5%. Okay, so that is actually lower than expected. Lower than expected. Remember, it was supposed to be negative 1.3. He's actually come in lower than that. No, sorry, what am I talking about? Higher than that. What I'm talking about that. No, it's lower, isn't it? Because it's lower, isn't it? Because it's less than 1 point. Yeah, it's lower than 1.3. So negative, a lot lower. I'm sorry, I just got excited. I'm getting myself confused. Initial jobless claims. Initial jobless claims come in at 210,000. So again, slightly better than expected. So it's slightly lower than expected as well. So initial jobless claims coming lower at 210,000. So that means 210,000 people, new people this week, or last week, sorry, has signed on for unemployment benefit. So, okay, so yeah, GDP was worse. And I actually remember that's negative 1.5. So it's worse than last month, which was negative 1.4. So there we go. Initial jobless claims, not so bad. But still bad. It's still 210,000 people signing on for unemployment benefits. So it's not brilliant, but not as bad as they were thinking it could be. Right, let's have a quick look, a proper look and see what's going on there, how the market's reacted to this. Straight away, okay, look, we see this is the USD Japanese yen. You see the dollar's come under pressure, not massively, but it has dropped against the Japanese yen. So obviously the GDP there. Let's have a quick look. Obviously, I said I wanted to look at the cable. How's the cable doing? Because the cable, which is the British pound, US dollar, don't forget. Okay, again, it's been in a different mindset so far today. And I would talk a lot more about this in my session when I go live again in just over 30 minutes time. Okay, very little bit impact. I don't think it's paying attention at the moment. Don't forget, sometimes when this information comes out, the data comes out, the market takes a while to digest it. So you don't always see an instant impact. Now let's have a quick look at the euro, see how the euro, okay, again, on this, on the 30 minutes, what was the impact on the euro? Again, slightly less. I don't think the euro is paying much attention either as it stands. Okay, so it's still trading around that level I was talking about this morning. And gold, see gold, how gold is doing, what we did today, gold. How did gold react? Indifferent. It's still trading around $1,844.62. Let's have a see what the S&P 500 felt by the S&P futures. Again, a little bit lower. Now it did hit the 4,000 point mark today, so it's now trading back under that. So a little bit of damper on that. So yeah, we'll probably have to see how the market digests this information a little bit later. Hopefully we can see how they feel. But really, in a nutshell, gross domestic product came in worse, negative 1.5, not good news. Luckily, though, the initial jobless claims came in at 210,000, so slightly better than anticipated, Still bad, still shows that for the last couple of weeks, we're hovering around that 200,000 jobless number. So yeah, so that's the impact. So let's have a look at how the market is looking in the next 30 minutes. Okay, don't forget, I'll be back on air in 30 minutes, a little bit later than usual. Usually I start at 4, but because I'm doing this watch along today, I'm starting a little bit later, but I will be online at about 4:05 to discuss other factors in the European session and at the same time, the impact of the market and what we could be looking out for in the US session. So don't forget to join me again in just over 30 minutes time. Or just under 30 minutes time. Anyway, till then, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I do suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. Till 30 minutes time, every single one of you, trade safe.